Hello again, RoyZesch.REALTOR here with Coldwell Banker Legacy in San Angelo. Today I want to talk to you a little about what happens at closing. So you hear about the closing and all that, so I just want to go into a little of the details so whether you're a buyer or seller, you kind of know what to expect as you're going into it. So talked last time about title, insurance, the title policy, and how all that works. So that's one of the things you'll be presented with at closing. Both parties will sign off on that. It's insurance for the buyer. So you'll have all of that information we presented to you. But typically we'll get that a few days early so we have a chance to review it, see if there's any issues there. If there's something that they find that they can't cover in the insurance, an exclusion, then we need to know about that and make sure that both parties are okay with that. So the other thing is there'll be what's called a settlement statement or a HUD-1 statement that comes out 2 or 3 days ahead of closing. And it's basically a statement saying that the seller is going to pay for these expenses at closing, the buyer is going to pay for these expenses at closing. Then it shows the loan amount coming in for the buyer, and it shows the net proceeds that the seller will get after the closing, all those kind of things. Shows who's paying what, and just so you can have a chance to review that. We'll go over that a day or two before closing when we get it. I'll look at it, make sure I don't see anything wrong. A lot of times there's little small errors in it, and occasionally there's something fairly large in there, but it's pretty uncommon. So then on the day of closing, you'll go in and we'll sit down at the table. The buyers will go into a room with the closing agent, and the closing agent and their agent, their realtor and the closing agent and the buyers will go in and they will sign all this paperwork. So for the buyers, there's a lot, and for both parties, there's a lot of paperwork, a little bit more for the buyer. So you'll sign off on that HUD statement, the settlement statement showing what each party is paying out of the transaction. You will sign the mortgage. You'll sign or actually it's a deed of trust that basically is recorded saying that you owe money to X bank for this. You'll sign the deed transferring the property to you. There's other things that different pieces of paper that'll be signed through there. But basically at this point you're signing. The title company's acting as an agent for the lender in effect, and both parties, and getting everything put together so it can be filed and recorded. And so then that recording of that deed of trust and the deed are what protects the lender and the buyer in the future with stuff. So that will be then all recorded at the county office. So the buyers will go in and sign all these paperwork. They'll have a chance to ask questions, to get explained to you if there's any questions on it, stuff like that. Then the sellers and their realtor will go in and do the same thing. Now they'll be signing the deed, transferring it from them to the buyer, but they don't have the deed of trust. That'll be a lien release, so that they have to sign that comes from their lender. So the other thing that's kind of happening in the background that you don't really see is that the title company is acting as an escrow for all parties. So when earnest money is put down early in the transaction, that is held by the title company. It's not their money. It sits in an escrow account where they just are protecting it. So then it is applied on that HUD-1 settlement statement to show who's it going to. And then the buyers will, before closing, they'll deposit money with the title company that will be sitting there and held, and then the lender, if there is one, will deposit money with the title company. So the title company will have that money, but they're just holding it in escrow. Then after closing, they will take that money in escrow from the lender and the buyer, and then they will apply it to the lien, to the borrower or to the seller's loan on their house, to pay off that bank, so that bank then can release the lien that they hold on the property, and so that then the only lien probably on the property would be the one held by the buyer's lender at that point. So all that stuff will be filed. So basically they're the person everyone trusts in the middle to handle all the money and make sure everything goes right, the money gets in the right pockets, so that everyone is protected in this process. So it's a lot of behind the scenes stuff that you don't even see. But basically both parties will go in, you'll sign paperwork, have plenty of chances to ask questions. Like I say, most of those will have been reviewed by me as your agent, and you've had a chance to review them beforehand. If there's any questions, we'll go through them earlier to keep it from being an issue at closing. that's kind of a simple overview of what happens at closing, just so you kind of know what to expect when the time comes. There shouldn't be any surprises at closing. There almost never are, but occasionally something pops up at the last minute and we have to deal with it, and that's just part of life. That's part of what, as realtors, we end up getting to deal with, is to try to make those things, avoid them when at all possible, and when they can't be avoided, to help smooth them out and make them get handled in a way that satisfies everyone. So, any more questions, give me a call. RoyZesch.REALTOR, 325-268-0775. Thank you.